Hello everyone and welcome back. So in this section of the course we're going to look at how to add a supplier that is going to supply us with a vehicle that we need to deliver our products to customers. So without wasting time, let's see how we can add that. I think we've covered this, but we just want to reinforce so that you are not left behind. So here we click on supply, and here let's copy this supplier name here and paste it here. Let's do the same here. Okay, so let's scroll down, and the balance, starting balance 0, the net is let's just say net 60. Okay, that we are going to cover this in the next 2 months. Okay, so let's just click on save. Okay, that's perfect. So let's see. So it's still loading now. Okay, that's fine. So we are going to work with Felix Motors. So we are buying a delivery vehicle that we are going to use to deliver vehicles, to deliver parts to our customers. So the vehicle's cost is 5,950, and the vehicle was bought on the 1st of January. On the 1st of, let's say, July, and the scrap value is 0, and the straight line depreciation method is 20%. So the annual depreciation is going to be 1,190 at this rate. Okay, so the monthly depreciation is going to be like this. Okay, so since we bought this, the depreciation, since our year starts on January, which means this is sort of, if it was bought on 1 January, then we are saying if we count from January until October, for example, if we do this January, so January here, and then we say let's count to December, sort of. Okay, all right. So July, August, September, October, November, December. So these are just 6 months. Okay, so which means for 2024 the depreciation will be 6/12 multiplied by this annual depreciation. So it's gonna be 595, since the vehicle will last for 6 months during the first year that it was bought. Okay, so just like this, which is fantastic. But here, so which means here the monthly will have to be so the same thing that we've done there on top, which means we're going to say 6/12 multiplied by this, by what do you call it, sorry, so I'm doing it on the wrong. So 6/12 multiplied by this, also the depreciation is going to be 49. So let me link that through. 49.58, something like that. Okay, so we want to purchase this vehicle here. So to do that, we're going to do a bill, right, to Felix Motors. That's a supplier invoice. So let's wait. It's loading. Let's wait a little bit. Perfect. So we bought this vehicle on the 1st of July, and that's Felix Motors there. Okay, so that's fine. And their bill number, let's say, was something like that. Maybe that was the bill invoice. And then the category, we want to choose, what do we want to choose here? Let's see what we can choose. So in the category, we want to choose like property and plant. So description, let's say delivery vehicle here. And the purchase amount is 5,950, and we paid that. Okay, so that's a bill, so we haven't paid that. We haven't paid that yet, so here we have to do save and close. So these guys, they said you have to make a deposit of 50%, so which is divided by 2. So we want to pay this amount. Right. So here, this is it. We made a payment. So let's just go to suppliers to make a payment. So we have got Felix Motors here. We need to make a deposit. Perfect. So on that same date, this is the original amount. The payment that we did was 2,975. This was the payment, right, that we did there. So perfect. So then we do save and close. Okay, so here we are also left with 2,975 here. Okay, that's perfect. And if we go to our balance sheet, so we go to reports, let's go to reports, and let's go to our balance sheet. We must see the vehicle that we bought under fixed assets. Okay, so under property, plant and equipment, you see this is the cost at which we bought this, which is great, right? So now we need to account for depreciation using some journal entries. So in the next section, that's what we are going to do.